Hey there. Hey, so I wanted to share a story. I was coming home from an errand the other day, and obviously, being in this business, I think about this business a lot. I think about whole life and how it works and what it can do and all that. And so I've had this thought before, but the other day when I was thinking about it, it struck me in a different way. And that is the savings aspect of it, in that each month you are sending a premium to the insurance company to cover the base, and if you have a PUA attached to it, and pay the PUA if you can. And I'm thinking over time, and for us, it's been a little over 4 years now since I discovered this and implemented our first policy. And I'm coming home the other day and I'm thinking about how we had taken a loan for this room when we built this room a little over a year ago. And it was sizable. It was somewhere in the vicinity of around $50,000, I think it was. So over the course of 5-6 months, we were taking loans each month to pay the contractor and materials, and I was helping with the project because I have those skills. And anyway, I was thinking about, well, I'm going to send some money back to the insurance company to pay the debt, just like I would if I was with a regular bank, except that they would have terms set up, and I would have to pay every single month. Where with this, I don't. If I have a month where I decide I want to send or do something else with the money, I can do that too. But anyway, I'm coming home and I'm thinking I want to send some money back. And I thought, well, that'll pay off, X amount of dollars. So just say I was sending $100 back. Of that $100, about $95 of it goes back to cash value, because there's a little bit of interest. And I'm sending the premium and I'm sending this money, and all because we're past the beginning stages of the policy. All the money we send in our premium now, you see it show up in cash value, which is exciting, and a little bit extra because this interest, grows. But all of that shows up, and then the money that I send back to pay the loan, about $95 out of $100, that shows up in cash value as well to use again later. And for some reason or other, I got really excited about that. It might not be exciting to you to think about it, but I thought of it as it's not a forced payback. It's more of an incentivized savings. That's the way I was thinking about it that day. I'm incentivized to send the money back to my, call it a savings account. It's life insurance, don't get me wrong. It is life insurance. It's a tool that has mechanisms as to the way it works, and this is one of the points. When you send the money back to pay back the loan, that money that you send goes back into the general fund of the insurance company and pays that amount back of the collateralized loan that you've taken. And it is collateralized against the death benefit because they know they're going to get their money because of that. But I got excited about the fact that when I send the $100 back, about 95 of it shows up. So my premium is growing it, and paying it back is growing it. I was like, okay, now I really want to pay this back quick, because then I'll have X amount of dollars there again to potentially take my wife on her trip that she wants to go on. And it's going to be her birthday next September, and I would like to be able to take her on that, which we will. But I'm just using it as an example as to what you can do. Go on a vacation, buy a car, maybe pay for some education, maybe invest in something that you have come across, something that you know something about, and all of that. But I got excited about the fact that money is going back into the policy or back to the general fund. It's all going to the general fund, be it the premium or the loan repayment. And that money just grows, and it grows every day from the side of interest, which is accumulating every single day. So I found that very exciting. If you have any questions about the way that savings, taking a loan, paying it back, or anything that I've mentioned in this video, please reach out to me. And please do share this. This is something that can help everyone if they understand what it's really doing and has the patience to start one, because we had to be patient for the first 4 years where you're sending money and you send, just say you sent 20,000 or 2,000, and only that first year I think it was maybe 12,000 showed up in cash value. So where did the other 8 go? Well, it goes to salaries at the insurance company, all of their technical stuff that they have to pay for. They have to pay for me. The insurance business is set up as a commission only for independents like myself. So it pays for that. It structurally builds a foundation under you, and you pay for that to set that up. And then over the course of 3, 4, 5, depending on how old you are and when you start it, it's different for everybody. But for us, it was just under 4 years where that we crossed over, that everything that we send in premium shows up in cash value. So if you can be patient for those first 3, 4, 5 years, once you get past that, brings a smile to your face. So anyway, thank you very much for listening, and if you have any questions, please don't hesitate to reach out. All right. Have a great day. Until next time.